Hello everyone, this is Alexander Nikolov from trendrecognition.com. Today I'm going to take a look at the US stock market. As you know, the US stock market is rallying sharply higher today due to the positive earnings reports from Intel and JP Morgan. S&P 500 is trading around 1182 right now. Earlier today it hit 1184, which means that it actually reached our target on our daily position, our very short-term position on hourly chart. So the market is rallying sharply, but the stocks that actually brought this excitement on the market are surprisingly for many people down on the day. For example, Intel, as you can see the chart, an extremely huge downside day, outside bar day in Intel, so Intel is selling off sharply. Also, JP Morgan is selling off sharply today after the positive earnings reports. This is quite natural actually, but most of the people don't understand this kind of patterns because they don't believe actually they believe that the market is driven only by news, but actually that's not the case. The market is not driven by news, and what happens usually near the earnings season is that the good news from most of the companies is actually sold off from the smart money to the public, and that's exactly what is happening right now again. This is what happened in the past 3-4 quarters when the earnings started to come out, but obviously investors didn't learn anything from that, and again the public is buying and the smart money is selling. And regarding the broader stock market, the S&P 500 index, I expect to see well, some further gains probably toward 1200 or even close to the April top near 1220. The maximum upside potential that I see right now is 1257, but I doubt the market will be able to get that far. And most likely, following the pattern of the previous earnings reports, those in January this year and in April this year, the market is likely to top out sometime next week, and some kind of a pullback. It may be a moderate pullback, it may be a sharper pullback, but some kind of a pullback is likely to develop. One area that should be monitored very closely is just above the 1200 area. It's about right now 1206. This is the level where the 200-day Bollinger Band is right now. This is a larger period. These 200-day Bollinger Bands, they actually follow the larger trend. So as you see, the lower band actually held quite well the prices in June and then in August. I expect similar thing to happen and the prices to encounter serious resistance around 1205, 1210 area. So maybe a short-term top near that level is likely to be seen early next week. Nasdaq 100 is also strong today, and it has been much stronger than S&P 500 recently. It's already on a way to new highs for the year, and I think it will top out around 2100 area, which is a really strong Fibonacci level calculated from a price move back from late 2007. Okay, so what I expect for the market is further strength this week and some kind of a top sometime next week after 1.5 weeks of positive earnings. But as I said, in today's examples are really quite impressive. The positive earnings reports are likely to be sold off by smart money. Let's take a look at the volatility, the VIX. As you see, the volatility index declined sharply in the past 3-4 days after being stuck in a range between 21 level and 28 level. It declined below 21 3 days ago, and now is trending lower. So I expect the volatility to decline further in the months ahead. Probably by the end of the year it will reach 15 or even lower levels. That's quite natural. Usually the volatility is declining by the end of the year, and also the clear trend, of course, is down. So a decline in VIX is likely in the next few months, and of course that may result in positive outcome for the stock prices. And finally, one final ratio that I've been following recently. This is the S&P 500 SPY divided to TLT. This ratio actually gives us what the market prefers, if it prefers stocks or if it prefers bonds. And as you know, in my previous update, I said that if this ratio is to become bullish for the stock market, it should go above 1.16, 1.18. So we are currently right around this level. So this could turn out to be positive for the months ahead for the stock market. Right now it's kind of a neutral reading, but it appears that the money is shifting away from the bond market to the stock market, at least right now. So these are my thoughts as of today. Very strong market today in both Nasdaq and S&P 500, but again, the stocks that are actually brought the excitement in the market are down for the day. Intel and JP Morgan are sold off sharply, so one should be careful going forward as a top may be fast approaching. Thanks for watching, and I'll be talking to you again later.